Hey guys, so Coinbase just had a data breach. Looks like some overseas roundabout hacker managed to get a hold of some user information. So we're going to listen to a quick video here from Brian Armstrong, see what he has to say about it.
Hey everyone, I want to make you aware of a disturbing email that we received recently at Coinbase. It was a ransom note demanding $20 million in Bitcoin in exchange for these attackers not releasing some information they claim to have obtained on our customers. Now, we like to do things transparently here at Coinbase, and so I'm going to respond publicly to these attackers by saying no. We are not going to pay your ransom. In fact, I have a few next steps in mind that I'm going to share at the end of this video. But for the rest of you watching, wondering what happened, we did an investigation here, and these attackers have been approaching our overseas customer support agents, looking for a weak link, someone who would accept a bribe in exchange for sharing some customer information with them. Now, our support tools have limited access to customer information. There was no password.
So this is pretty much it. We're going to go over everything that was leaked here in a second. It goes on for about 3 minutes there. But I just want to say that Brian Armstrong did a phenomenal job here. You know, I think that most people understand that there are bad actors out there that will do anything and everything to try to get into people's information, to hack them one way or another. But I think that it speaks volumes to have a CEO come out and just be absolutely 100% transparent with their customer base, you know, as opposed to what we've seen sometimes where it's this opaque mystery, there's veil type of, like, it's like they try to gaslight you and they don't want to tell you the full truth. So just absolute phenomenal job here by Brian. Now we can take a look here. So basically the data leak, kind of the TLDRs, criminals target overseas customers, support agents to be able to bribe a small group to copy user data from internal tools. Breach impacted less than 1% of users. Leaked data was names, addresses, phone numbers, masked social security numbers, and bank accounts, government IDs, accounts, and account info. So no passwords or funds were compromised. That's the really important part there, I think, that a lot of people care about. Coinbase refused to pay the $20 million ransom demand. And, you know, that makes a lot of sense, too, because we're talking about, you know, people's names, addresses, and things of that nature. And what is a ransom going to do? You know, I mean, they're going to send you the file back that they've already copied? I mean, it doesn't make any sense. So, you know, I think they did the right thing here. There's no point in paying them. They could have easily copied the information somehow. Moving on. So FTX Recovery Trust will distribute $5 billion to creditors in its second round of payouts on May 30th. Now, my understanding is that this is going to be cash paid out. I believe it's in stablecoins, actually. So, you know, we potentially have $5 billion that could start flooding into the market here very, very quickly in about 2 weeks. So U.S. Core PPI falls to 2.4%, lower than expectations. This is a producer price index. So, you know, again, this ties into like inflation. Yeah, I mean, you know, inflation's coming down. You know, this is a really good sign. It means that, you know, we're not, it's, like I've been saying for a long time, the inflation situation is basically over. There's nothing there we have to worry about. So this is the really cool news, and a couple other pieces here. Bullish. So Mastercard teams up with MoonPay to launch global stablecoin card payments, enabling crypto payments to 150 million merchants worldwide. And, you know, this is what I've been talking about. This is the real retail coming on chain. It's not retail traders, okay? It's grandma with her debit card, her little Mastercard, MoonPay, where she can just tap and pay with stablecoins seamlessly. This is real retail coming in. This is the floodgates opening like we've never seen before. And so we can see other news about that. So Bernstein analysts point out Ethereum's recent price rally is driven by the growth in stablecoins and tokenization adoption, layer 2 institutionalization, and unwinding of ETH short positions. So yeah, I mean, it makes a lot of sense. You know, I've said for a long time, I think that Ethereum was severely mispriced because of tariff fears. I think a lot of people shorted it. And then we saw the Pectra upgrade come through. We saw a lot of bullish news and the price spiked. And so we're seeing a little bit of short squeeze where shorts are having to cover these positions because they're seeing this massive global adoption. They're seeing that the overwhelming majority of stablecoins are on Ethereum, and it's only going to go up from there because they're starting to wake up to, oh, all these institutions are massively building on Ethereum. Yes, they're building on these other smaller chains a little bit, and mostly what that is they're wanting to For example, like what they'll do is they will make their product available to people that are on another blockchain, and then they drag the funds over there. So, but it doesn't mean that that's their default choice to tokenize assets on. It's more of a case of, well, there's a little bit of demand here because this treasury for some project wants to hold these US treasuries that are tokenized. It's more of that type of thing, as opposed to, yeah, we think this is the absolute best product. Let's natively launch our products here and just focus on that. No, you look at RWI.xyz and you can see that it's overwhelmingly, I mean, it's like 80% tokenized onto Ethereum. It's not even close. So moving on here, and again, more stablecoin talk. So what was it, 3 years ago, roughly, Meta, Facebook, they launched their own Ethereum killer, quote unquote, and it ended up not going anywhere. So what they're doing now is they're in talks to deploy stablecoins on their platform. So from my understanding, what they're looking to do is integrate stablecoins like USDC onto the platform so that they can accept payments and transfers and whatnot. So they're essentially going to be like a payment, I don't want to say payment processor because it's not technically correct, but essentially you'll be able to, they'll be integrated on the Facebook platform. So if you want to send some to your mom, you can just send those stable coins right over very easily. And again, this is mass adoption like we've never seen. People talk about when's the iPhone moment. Well, the iPhone moment for Ethereum is essentially stable coins. That's going to mass onboard people. And once you have stable coins on the platform, then there's much more demand for other applications to be built out. So then you see DeFi explode, and we're just off to the races, and we see just massive adoption all across the world.
It's big news for you guys on that.
So now we have another clip from Brian Armstrong talking about how everybody's going to have crypto within their 401ks. And I do think that's the case. I think we're going to start seeing more and more essentially automatic spot buying within people's 401ks for a crypto allocation.
Big news for you guys on the S&P 500. Is that going to change your outlook at all, or the impact that Coinbase has?
Well, we're very happy to be included in the S&P 500. It now means that crypto is here to stay. It's going to be a part of everybody's 401k. It's a testament to the hard work of our employees and our investors. And it's a big appreciation to our customers, too, that helped us get to be one of the most trusted companies in America. And so we couldn't be happier.
Thank you so much.
So I'm not sure if he's talking about, it seems like what he's talking about, crypto is going to be part of people's 401ks in relation to they're invested in a crypto company because Coinbase was just added to the S&P 500 and everybody invests in the S&P 500. But I do think that what I was talking about before was that people are actually going to have to like spot Ethereum or spot Bitcoin positions within their 401ks long term. So I think that pretty much wraps up today's episode. Y'all have any questions, leave them in the comment section down below, and I'll see you on the next one.